Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin is currently trading around $103,000 after briefly dipping below $100,000 on November 4th for the first time since May. Galaxy Digital dramatically cut its year-end Bitcoin price target from $185,000 to $120,000, citing Bitcoin's entry into a maturity era characterized by institutional absorption and lower volatility. On-chain analyst James Check warns that $95,000 represents Bitcoin's last stand, with approximately 57% of all invested capital currently underwater. He notes that bear markets historically begin once unrealized losses exceed 10% of market cap, and we're currently at just 3%. Bulls will mount one hell of a fight to defend that $95,000 level. Privacy coins are staging a massive comeback. Zcash has surged over 900% since late September, overtaking Monero as the leading privacy coin by market cap. About 20 to 25% of circulating Zcash supply is now held in shielded encrypted addresses, the largest share since the network launched. This revival reflects a return to cryptocurrency's foundational cypherpunk ideals. Ripple just raised $500 million at a $40 billion valuation from major Wall Street players, including Citadel Securities, Fortress Investment Group, and Brevan Howard. The company announced a groundbreaking pilot with Mastercard, WebBank, and Gemini to settle credit card transactions using its RLUSD stablecoin on the XRP ledger. This could mark one of the first times a regulated US bank settles traditional card payments using a stablecoin on a public blockchain, pending regulatory approval. MicroStrategy's Bitcoin accumulation strategy hit another milestone as its perpetual preferred share, STRC, reached par value at $100, unlocking $4.2 billion in available capacity for additional Bitcoin purchases. Robinhood reported stellar third-quarter results with crypto trading revenue surging 339% year-over-year to $268 million. The company processed a record $80 billion in crypto trading volume and added prediction markets as a new business line that generated over $100 million in revenue. Canadian regulators announced plans to establish a framework for Canadian dollar-backed stablecoins following the US Genius Act, with the Bank of Canada designated to oversee implementation. Meanwhile, Coinbase's chief legal officer accused major banking lobbies of protectionism after they opposed the exchange's National Trust Charter application. Several analysts are declaring Bitcoin's traditional 4-year halving cycle officially dead. Wintermute states that what drives performance now is liquidity, not miner supply constraints. Daily ETF inflows of $1.2 billion now represent 25 times the amount of new Bitcoin entering the market each day from mining, fundamentally transforming Bitcoin into a liquidity-sensitive asset. European regulators arrested 9 people connected to a $689 million cryptocurrency fraud network. Despite the massive scale, authorities recovered only a tiny fraction. Hong Kong separately charged 16 people, including influencer Joseph Lam, in the $205 million JPEX case, Hong Kong's largest ever crypto fraud. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.